In today's event, we'll be considering how to secure open banking. Because as many of us know, open banking is quickly becoming a global phenomenon. Banks are opening APIs for fintechs to integrate with customer data, spawning a whole new economy of composable financial services that improve the end banking customer experience. However, bank data is a sensitive touch point, and opening bank infrastructure brings significant risk, and it requires an impeccable security response that meets compliances with data regulations. So today we'll be discussing how to open banks without making them vulnerable. We'll be introducing what open banking is, and we'll be covering state-of-the-art bank-grade security standards to ensure banking APIs and data privacy meet the latest regulations and compliances. In this live cast, we're bringing in open banking expert Chris Wood, who will provide an overview of common regulations and open banking security standards. And next up, we'll be featuring API security expert Daniel Lindau to discuss the benefits of an identity-driven implementation to reach bank-grade security for open banking APIs. And for those of you watching live, we welcome attendees to ask questions. And after these two sessions, we'll come together for a group Q&A session to tackle them all. So first up is Chris Wood. Chris is an experienced technologist and Nordic APIs veteran speaker. He specializes in APIs and is a subject matter expert on open banking. He's been a consultant for many open banking related projects and is currently a catalyst at Axway. Chris is also an avid Nordic APIs contributor with over 30 blog posts and counting. So today in his presentation, Open Banking Security Standards, Chris is going to take a peek at some of these open banking standards, why they have been implemented, how they work, and the kind of use cases they are intended to meet. So yeah, thanks for joining us, Chris, and take it away whenever you're ready.
Sure. Okay, guys, I'm going to share my screen. Okay, just Bill, can you just confirm you can see it?
Yeah, it looks good.
Cool. Okay, well, thanks for joining us, everybody. Very glad to be here. Just to give you a little insight into open banking standards, especially in the arena of security. So why am I qualified in this? Well, I worked on UK open banking standards, and I've reviewed more standards than I care to mention across Europe. And the rest of the world, oddly enough. So I feel like I've got plenty to say about how security standards for open banking work. Now, the first thing to make clear is that when we're talking about open banking API security, there's the model of open banking and there's what's actually on the ground at the moment. So the model of open banking is really what the Open Bank project proposed over 10 years ago, right? It's the composable access to account that was implemented in APIs that banks could pick up and just use, and it was all great, right? Well, that model hasn't really manifested itself very readily. Some banks do use it, but the biggest focus has really been through regulations that have come along and obligated banks to implement APIs to offer up access to account. The biggest of those regulations, and the one that really is synonymous with what we call open banking at the moment, is PSD2, Payment Services Directive 2. It covers the whole of the European Union, and it is still implemented in the UK, even though it's left. And that was the spur for standards in open banking to be created. So it's worth stating that PSD2 doesn't actually say banks have to have APIs. What it says is banks have to make interfaces open to new roles in the market, and those roles are what we broadly say are fintechs. They're also called third-party providers, also known as TPPs, but essentially the participants in financial services that aren't banks, but they need access to customers' account to do things on the customer's behalf that the customer wants them to. So it's not a free-for-all. You can't just become a TPP and start going and leeching customers' data and doing all sorts of funky things with it. It's actually tightly controlled and regulated in terms of how those third-party providers, I'll call them TPPs from here, are able to actually go and access a customer's account. And it may be to get information from the account so that they can go and process that on the customer's behalf and show them, for example, their financial history or some aspect of how their spending patterns work, or share that data with mortgage lenders so that mortgage lenders can then make a mortgage offer to them on the basis of their real income. Or it may be in the sphere of payments, and payments it's a kind of a semantic thing, but it's payment initiation. So being able to say to the bank, please pay this payee on this customer's behalf, and I have the permission to do so. So all the stuff you hear in the market about embedded finance and open finance and all the rest of it in terms of how payment journeys might be changed, that's the kind of the payment side of it. And all that stuff is being manifested in what the APIs that are being created as part of PSD2 and other regulations are bringing to the market. And all those APIs are, generally speaking, being created under open banking standards. So obviously there's a need to make sure that APIs are secure, and that there's a tremendous amount of due diligence in terms of creating those standards and implementing them correctly, so that one, customers' data stays safe, two, only TPPs that are allowed to can access those APIs. And hence we've got this kind of leveling up, a playing field of different API standards being created in different markets around the world to make sure that open banking, one, can grow, but two, can also be done so that customers' data is as secure as it possibly can be. So that's the reason that standards have come about. It creates a level playing field, it helps get regulations into the market, and it ensures customers' data remains secure. But ultimately, you can really boil down to API security in open banking down to two approaches. Number one is mutual authentication over transport layer security. Number two is Oauth and upwards. And what I mean is profiles on top of the Oauth framework. And I'll explain what that means, why this is the basic approach in the coming slides. So first we'll look at mutual authentication over transport layer security. I'll call that TLS from here. So what's mutual auth over TLS? Well, it's a HTTPS connection where both the client and the server present certificates. So what that means is typically when you make a HTTPS connection, if it's one way, you're just validating the server's certificate and ensuring the server certificate is someone you trust. Right? With mutual authentication, both the client and the server are obliged to present certificates, and those certificates identify both the client and the server. Now, the natural reaction that I hear all the time is, what, they're using certificates, they're using a PKA. Oh, it's so complicated. Why couldn't they have done something simple? This is supposed to be the cutting edge of API security and open banking. Well, actually, mutual authentication and TLS and private key infrastructure is tried and tested. It's ubiquitous. So rather than going for some cutting edge security solution, the standards tend to engineer towards stuff that's readily available and can readily be implemented. So in terms of the kind of the approach, it tends to be everybody in the market can definitely do this. And whilst the sort of the subjective view is, oh, it's fiddly, we have to look after the key and have a certificate signed and this, that, and the other, it's actually a readily available approach to implementing transport layer securely pretty effectively. So mutual authentication is in almost all the standards, but in Europe that's been taken off and turned into something even bigger. And this is my, I guess you could describe it as my EIDAS dreamscape, right? The EIDAS is a scheme in Europe that's used for electronic communication. It's bigger than PSD2 and it's bigger than open banking API security, but it's the mechanism by which mutual authentication is enforced, implemented and enforced. So what have you got? You've got mutual authentication with transport layer security. The certificates are special ones because they also carry the rights of the TPP in terms of what they're able to do. If they're, for example, allowed access to account information, it carries that information. If they're allowed to make a payment on a customer's behalf, that carries that information. So the certificates are kind of, if you like, upgraded to carry extra attributes. And there's two types of these certificates. There's one called a QWAC, which is a Qualified Web Authentication Certificate, which is used for transport layer security. And there's another one which is called a QSeal, which is used for digital signatures. The QSeal is, I think, personally, a bit less important in terminology of open banking, but the QWAC is absolutely mandatory because that allows a TPP to identify themselves. Then across the European Union, there's things called QTSPs, which are Qualified Trust Service Providers. They're kind of the same as a certificate authority. So they're allowed to issue these certificates. They're allowed, our TPP has to buy them. But essentially, they're the point of reference that in the same way a certificate authority is a point of reference in terms of PKI. So mutual authentication is the, with TLS is the basis, then EIDAS is that on steroids, and it has a load of kind of the acronyms that go with it, but essentially that's what's happening in terms of the most basic level of security. You'll note the United Kingdom has a big cross for it. Obviously, it's left the European Union, but also it's left EIDAS. It's no longer allowed to be a member because that's what the exit agreement says, though. So in the UK, we actually have things called OB-WACs and OB-seals, and they're morally equivalent. So in terms of standards, it's virtually exactly the same. So that's the kind of the mutual authentication side of standards covered. There's some variant in nearly all the standards out there. In Europe, there's this special EIDAS version of it, but it exists because it does a good job, you know. So the other thing that I mentioned that could be is the starting point for so much of this is Oauth, right? So Oauth is obviously ubiquitous in terms of the API economy. It's one of the first standards that came into place that allowed the delegation of authority so that you didn't have to share your password with a client for an API that was hosting your data, right? And without getting into all the semantics of Oauth, that was really critical because it allows that abstraction of your permissions and rights away from the API that's being accessed by a client. So if you know the usual example is if you're making a post to Twitter from an app, the app never needs to see your Twitter password, right? So really simple premise. So it's used consistently within the API economy. Is there any reason that banking should use it? Well, not really. So out of the box, Oauth 2 is supported in many of the standards. It's in the Berlin Group standards. It's in the standards from France. Sometimes it's not supported. So in Switzerland, they're working on a cut of the Berlin Group standards, and Oauth has been taken out of it. There's not much to say. It works. It's exactly the same as it always has been. But is it good enough? Does it meet the needs of the more rigorous security constraints that should be in place for open banking APIs? Well, the jury's out across different standards groups. Some have stuck with boilerplate Oauth. Some have gone to the next level, and we'll discuss that in a minute. But there's certainly the ways to improve on Oauth. So way number one, going back to our original premise of a lot of this is underpinned by mutual authentication over TLS. There's now a standard. It's in draft, but we'll find out that it's actually in use in another standard in a minute for using Oauth with mutual authentication. So essentially, by presenting your certificate and making a connection, you're proving who you are as a client. And by virtue of proving who you are as a client, you can then therefore access the Oauth infrastructure to prove who you are, and 2, get yourself an access token to go and do other things. So this bringing together of mutual authentication with Oauth is a sign of how tried and tested mutual authentication is as a mechanism for API security. So this draft standard for Oauth plus mutual authentication was created as part of the financial grade API standards, which we'll look at in a minute. But it's evidence that upgrading Oauth to add extra security and extra features for open banking APIs is considered important. So if we move on from that, then it's kind of into the next level up, we're then into the need to provide proofs of authentication of the end user, right? The end user in this circumstance is the customer who's gone to the bank in order to share their information with a third-party provider. So the natural evolution from Oauth into something where there's proof of authentication that the end user has actually authenticated himself is OpenID Connect. It sits on top of Oauth 2. It's an Oauth 2 profile, but it provides proof of authentication through an ID token. So they can actually say, look, here's an ID token. It proves the user has this this identifier. It gives a load of other attributes about the act of authentication, and it's cryptographically signed because it's a JSON web token. And this essentially says this user authenticated, and I'm signing off that they have done it. And this is my proof to you as the client. So a really important building block in terms of providing extra functionality that's not in Oauth 2. Oauth 2 is all about authorization. Actually adding proof of authentication is really, really important. It's got masses of optional features, stuff like, and I won't go into in much detail, custom claims, the request parameter, serializing the request parameter at a URI, a bunch of different features that allow it to be extended, which is really, really important for what came next in terms of open banking. Incidentally, before we move on, there is a primer on OpenID Connect on the Nordic APIs blog. If you don't know about it, please go and check it out. So OpenID Connect provides a building block for what's becoming the most prevalent security standard in open banking, the financial grade API, or FAPI for short. This is an OpenID Connect, an OpenID Foundation profile, which sits on top of OpenID Connect and provides extra security for financial organizations, so that there's considerably more security features provided at the authorization server. So why is that important? Because it tightens up the behavior. It makes sure that the authorization server acts in a particular way and is always doing that consistently. So the FAPI profile evolved somewhat from the UK open banking standards. There was a security profile in the UK open banking standards, which became a good chunk of what FAPI is today. FAPI's got 2 essential profiles. Part 1 is the read-only profile. The read-only profile is for read access to a customer's account. So essentially that tightens the screws a little bit in terms of the behaviors the authorization server has to adopt in order to protect customers' information. And then the advanced security profile tightens those screws even further to make sure that the behaviors are really constrained, including things like making sure that for public clients that they prove they actually have possession of a key, for the cryptographic algorithms, making sure they're constrained to the very only highest grade. So they're really, really important features in terms of really tightening up the security and making sure the implementation is as tight as possible. Then there's 2 optional profiles. The optional profile number 1 is the secured authorization code mode, or JAM, which is an upgrade to Oauth, so that the authorization code is actually protected by a signed JSON web token. So this is intended to stop replay attacks, can make sure that there's no injection of an authorization code, as this is passed between the authorization server and the token endpoint. And then the last thing is client initiated back channel authentication, which really rolls its tongue, but it's called CIBA for short. So this is a means of making the act of authentication asynchronous. So a client will call an authorization server and say, please go and authenticate user X, and they'll happen to have an identifier for user X, and the authorization server says, sure, I'll call you back. And that allows the whole authentication process to happen in the background. And once it's happened, the authorization server will call back to the client and say it's done. So a really well decoupled mechanism for doing authentication. A lot of the criticism about customer experience in open banking has been about, oh, you've got to do a redirect, and what if your mobile banking app isn't on the same device that you're using? You're on the desktop, but that's on the mobile. That helps decouple that act of authentication so that a user potentially can be authenticated in the background, and it could be more than one user. So it's a really important building block for the future growth of open banking. So FAPI is really important. It's in the UK open banking standards. It's in the North American FDX standards. I believe it's going into the CDR in Australia, so it's being adopted readily. And the key point is some really big brains went into this. You know, there's an awful lot of work gone into this in order to make it as secure as possible. So well worth the adoption in territories other than the UK. Just as an aside, the FAPI homepage is there, and we're on the Nordic API's blog. We've got an overview of FAPI, which goes through all these profiles in more detail. So what's coming? I say hopefully coming. If I was to look at open banking and look at what comes next, I'd say these are the big ticket items. Increase use of CIBA or CIBA style interactions. I just said about the potential for multiple users authenticating. That's really important in terms of business and corporate use cases where more than one person has to authenticate a payment. Access management at a policy level using user managed access. There's great potential in open banking markets to make use of this so that consent is managed at a policy level. At the moment, it tends to be managed on a case-by-case basis. So, but actually managing it as a policy level will be really effective. And in the pensions dashboard project in the UK, they're using it, looking at this, as opposed to using consent based on objects. Also standards that target a native mobile experience in a better way. The fact of the matter is that most of these standards are geared towards server type interactions, and actually having profiles for mobile operating systems that work out of the box would be really, really good. Improved customer experience through mobile banking authentication. So at the moment, we're still working towards being able to, some markets are allowing you to authenticate on your mobile banking app, actually bridging the gap between desktop and the mobile banking app through stuff like QR code scanning. Some TPPs are providing that, but making that more ubiquitous so the customer experience improves. And alongside that, using open standards for biometrics such as FIDO2, so that you can pretty much affect thumbprint or face anywhere in order to authenticate sharing data or making a payment. And the big ticket item for me is a useful digital identity across markets. So rather than doing enrollment or relying on the bank, having an independent digital identity that allows you to effectively you go anywhere in terms of how you authenticate yourself and how you do business across different banks and different TPPs. So that's it from me. I'm going to hand over to Daniel to take up the next section.
Awesome. Thank you, Chris. Yeah, there's a lot of sound advice there and so many intricate standards. And thanks for mentioning all the work you've done on Nordic too, like with OpenID, FIDO for biometric auth articles, a lot of great follow-up information there. So yeah, if you guys have any questions, feel free to drop that in the chat or in the group Q&A. And I'm just going to introduce Daniel really briefly, and then we'll get to that presentation as well. So real quick here, Daniel is a solution architect at Curity, and most of his current work is, is helping companies of all sizes build secure, standards-based single sign-on solutions. He has a background as an application developer and a broad experience in building solutions with standards such as SAML, SCIM, Oauth 2, and OpenID Connect. In his talk, Financial Grade Security and Compliance Techniques, Daniel will describe how to take on open banking with a standards-based approach to make it easier to follow your local regulations. So yeah, I'll just stop my share here and welcome Daniel. Thanks so much for being a part of this webinar.
Thanks, Bill. Let's see if I can get my screen shared. Like that. Do you see it, Bill?
Yeah, looks good for me.
Great. So, hey, and welcome here, everyone. I'm Daniel. As Bill said, I'm working with Curity. I'm working as a solution architect, identity specialist, working with our customers, implementing secure API platforms. I also do trainings in Oauth and OpenID Connect, both with Nordic APIs and with Curity for our customers. And done some talks here at Nordic API, so usually talking about API security. But today is the open banking subject, so I'm going to talk about financial grade security and hopefully give some insight on what we've been doing with our customers and provide some guidelines of how to build a good open banking platform using standards. So I'm going to start with kind of painting a picture of how we set up an open banking platform or any secure API platform in general. So I've set up all of these players that we have in here. And we try to solve the use case here where we have a user that wants to bring in a third-party application and access a piece of data that user owns. In the open banking world, that's probably me starting up a fintech app, and I want to be able to see my accounts in there to track my purchases and make a budget or something like that. So for that, of course, we have the third parties on the left there. And in the middle, we have the bank token service, it says there, but that is merely the bank that wants to give away access to these APIs. And to help with that, it has a token service that can issue tokens as authentication for the clients and proof that the user allowed this. In the middle, we have the API gateway that just acts as a middleware to protect the APIs in a bit, doing things like throttling and rate limiting and things like that. So let's see how we can bind these things together using many of those standards that Chris talked about. So first of all, we need to have this third party needs to be registered somehow in the token service, and that registration part handles getting a key or certificate for this third party to use to obtain the data that it wants, and also to be able to ask for authentication about their current user. But so for now, let's picture this third party as already registered. But this third party can then talk to the token service or ask for authentication, kind of stating the question, I, as a third party, I want to have access to this current user's accounts. Can you give me ways of obtaining that data? And this is done through an OpenID protocol or Oauth 2 protocol, probably the Oauth code flow, but doesn't matter right now. We talk with an open protocol with the bank. The bank's token service then will, of course, have to authenticate the user. One big part of the open banking standards are that the user has to be authenticated by multi-factor or strongly authenticated. So the token service must support the best authentication method available, probably. If it's PSD2, you need some kind of national ID, probably. If you're in another country, perhaps you have your own EID, but we build up a multi-factor authentication. The FAPI states that the user has to be authenticated by multiple factors, both a password and a fingerprint, for instance, or an authenticator app that can help us. But the token service takes care of that. And after the token service has authenticated, it should also collect the consent. So the third party is asking for access to the current user's accounts. So we need to ask the user about that. So the token service can pop up a question saying, this third party, this fintech wants to access your account on your behalf. Do you allow to do that? We can have descriptions saying that this is read-only access, or if it's write access for doing payments or things like that. Could be in a web page, it could be in an authenticator app where you cryptographically signs. It's depending on your situation. PSD2, probably you should use a cryptographically signed consent. Some regulation following the FAPI, perhaps just pressing OK is enough. But the token service collects this consent and stores it for later. The token service can then issue a token that is proving that this consent happened. So in this case, we see that the token issued is a random string token. So this token is opaque to the client, not containing any data for it. It's just merely a reference to some data at the token service. Anyone finding this token can hammer on it for as long as it like. It can't find any data from it. There's also a key symbol on that token, meaning that since the third party could authenticate using the trusted key pair, we could also bind the token to that key, making this not a bearer token as the usual Oauth tokens are, but sender constrained token. Only the one that holds this key can use this token. This token that then proves that the user consented to collecting this data can then be used for collecting the data at the APIs. But since this token is sender constrained, we also I suggest that you use mutual TLS. Some standards say that you have to, but if you use a mutual TLS, that means that you also can enforce this sender constrained token. This token is validated by the gateway. It can send the gateway to the token service and introspect it and get back the same token, but in a different format. Instead of this opaque token, the reference that we saw earlier, you get back the value token. So this is a JOT, a signed JSON document that contains the clear text of the contents of this token. This clear text contains what certificate was used when we issued this token. So only the holder of the private key that matches the certificate can use this token. So that means that the gateway can enforce a sender directly in the perimeter. And also we can perform some kind of coarse-grained access control here. We can check for the scope, for instance, for accessing the accounts API, you must at least have the account scope. If you have only read access, we know that you can't do a post method, things like that. The easier policies that we can do in an API gateway without getting into too much business logic, where we can filter out the bogus request at least. This by value token is then passed on to the APIs. Since the APIs get the value token, they get all the data they need to be able to authorize this request. This token will contain data saying that Daniel allowed this third party, this fintech, to allow his accounts on his behalf. All that data should be contained into this token, so the API can make the authorization decision themselves without calling out to a token service and asking, is this token really valid? We can prove it because it's signed by the token service, and the data contains everything that we need for this questions to be responded. So if you look at the full picture here, we can see that we have, on the right-hand side, we hide the data from the tokens, from the clients. So we keep away potentially sensitive data from the evil internet. And on the right-hand side, we use the token as the information bearer for all of these APIs that actually need this data. And we can keep the data in control. We know who can read it, and we know who cannot read it. We bind the services together using open protocols like OpenID Connect or Mutual TLS. And we keep the token as the information bearer for making sound and secure authorization decisions. I can't go into all of the details of this picture, but I thought I'd zoom in on some key features here that you might want in your platform to be able to get it to this stage. And those two we're going to do today is the TPP registration, the third-party registration, and the strong customer authentication. Look a bit how we can do that in a good way. So first of all, the registration. The OpenID has a standard called the dynamic client registration that specifies an endpoint where a TPP can send a payload, a JSON payload saying, I want to be a client with you, and these are the settings I want. Things like redirect URI and scopes and user authentication methods, they all go in there. This endpoint should, of course, not be unprotected. It can both have a policy, what scopes are possible to request, but we also need to authenticate this somehow. If we're in a PSD2 space, we saw Chris's slides there with the ADAS certificates. We already have a PKI at hand. So if we know that my clients are PSD2 enabled and I want to allow all TPPs that are ADAS approved to register with me, all I have to do is to set up a DCR endpoint and protect it with Mutual TLS and say all the QTSPs in Europe are trusted providers. So anyone that gets one of these TPP certificates can then go and register themselves. We also have kind of a policy in that TPP certificate, because it says in the certificate that this client is allowed to ask for read access for your accounts, and this client is allowed to actually do payments. So we have some kind of policy in there already. But and so we get a very good self-service portal almost for free. But if we're outside of PSD2, we might not have that PKI, but we can still use the same pattern. So we can't use the ready-made ADAS PKI to do the authentication of potential TPPs, but we could set up our own developer portal where a developer can register and generate a secret or authentication method to use for registering my actual application. This secret could be a token, a client ID, client secret just for this case, or it could be a software statement of some sort that can be used to actually just register me as a client in your platform. So doing it like that enables the clients to generate keys upon registration locally and send them to the server. rather than having the server, the bank, maintain a PKI. If the client register themselves, they can do self-signed, just as long as they use the same certificate later on. So it kind of pushes a bit from, we keep our house clean, but with the actual logic is pushed out to the clients. You should authenticate, and you should create the keys yourselves. Since we're talking certificates, certificates expire, and there must be a good way for TPPs to update their certificates when they expire. There's a sibling spec for DCR called the Client Registration Management Protocol, a tongue twister, where it defines an interface where TPPs can update themselves. Basically, you get a access token back from the register request that can be used to manage yourself. So when your certificate expired, you can use that access token and upload a new one. It's quite simple, but it makes for a more complete picture. But as for user authentication, if we look around in PC2 related material, you often see the words redirect flow or decoupled flow. So I thought I will dig into those two and what they mean and what we can do with them. So first, the redirect flow. The redirect flow is basically that a TPP redirects over to the token service or to the bank, and the bank hosts the API, the views that authenticate the users. So the UI there is hosted by the bank. It may or may not be able to change the UI, how it looks for different TPPs, but everything is at the server. As an authentication flow, this is pretty, it's very good because since you have it in a browser, you can do a lot of different things. It's hosted on the server, so you can change the authentication flow. You can switch out the methods without the clients having to know. And everything happens in the browser still means that you can pop out and do authenticator apps and come back. But the authentication flow is driven by the server. On the other hand, you have the decoupled method, where TPPs don't want to redirect to a bank or a server to authenticate a user. They rather want to use that authenticator app directly. So to realize that flow, you can use the client-initiated back-channel authentication, CIBA. CIBA specifies a way to make back-channel requests to the server to start an authentication transaction. And after making that request, it pops up the authenticator app, allows the user to authenticate inside of this app, and then come back to the TPP again. The TPP can poll the server, ask, did the authentication go well? And if it did, you get a token, more or less. Compared to the redirect flow, if you were in a mobile app, the redirect flow would have to pop up a browser, go to the token service, go to authenticator app, back to browser, back to TPP, and then see result of it. This could be a little bit too swooshy for the user because we were switching contexts a lot. As opposed to that, CIBA is a very good UX flow. It has one drawback, and that it's tying the authentication method to the app. This app needs to know the authentication flow. It needs to know that what authenticator app it should pop up and how to complete the flow. So if the server decides that a new authenticator app should be used, this TPP must release a new version. Another take on this, the decoupled method, is a method developed by Curity called the Hypermedia Authentication Api. It's not yet a standard. We're in contact with the OpenID Foundation trying to standardize this into an API and protocol to use to do only back channel requests and drive the authentication through the server. So as opposed to SIBA, you actually get responses saying what to do next. So if you're supposed to open up a authenticator app, you get a Hypermedia response with a link saying open up this link, which will trigger the app. And when you come back to the app, you get a link to say post this here and do this there. So we can drive the entire authentication flow from the server, which kind of combines the SIBA approach with the browser approach, because the Hypermedia is basically a full browser. We can do everything in that way that we can do with a browser. Running short on time, I see, but I only have one slide left, which is the summary. So to summarize what I tried to get across, use dynamic client registration for your TPPs, because that will give you a good way to collect the settings that your clients want. You do not have to maintain a PKI for keeping those keys. Always use under constraint tokens, because there really are no need for bearer tokens when you have when you have trusted keys with your clients. Centralized authentication to be able to use good multi-factor methods. Use a layered access control decision by using coarse grain in the gateway and fine grade in the APIs. And as always, consult the standards. There's very smart people writing those standards. So if you have a question, it's probably in there. So thank you. Look at our website. It's very good.
It's true. They have a lot of knowledge resources at the Curity site there. Thank you, Daniel. Thanks for sharing a really great presentation. And it's interesting to see a lot of those standards Chris mentioned actually being implemented in practice within a lot of those flows you walked through. We've covered a lot of information so far, and I'm sure people could easily get lost with all these different standards and different advice. So we'll get to that in a second. First, I'd like to answer one question submitted by Nigel Sheldon, and I think this was for Chris. Nigel's asking, are there any specific guidance on end-to-end encryption when exchanging messages over TLS?
It was for me. I can't answer that question.
No.
Yeah, that's a bit too close to real engineering. Daniel, yeah, surely you can answer this question.
Daniel, okay.
Yeah, sure. There in FAPI, there's a bunch of message integrity protocols. The JARM PAR, for instance, where you send in JOTs instead of doing query parameters to make sure that the integrity of your request lives all the way through to the server. And by default, those are signed JOTs, but they can also be encrypted JOTs. So both the requests and responses can come in encrypted JOTs. So that will make it also end-to-end encryption all the way there. So consult the standards. FAPI has the most.
Consult the standards, yes. And as Chris acknowledges, FAPI seems to be rising in importance. Chris, you said something interesting early on in your presentation that PSD2 technically doesn't specifically decree the use of APIs. It decrees the use of an interface. So that got me thinking, like, are security standards that general as well in PSD2? And is what we're seeing emerge mainly just, market and consortiums around these standards, and not like specifically, entitled within the PSD2 spec?
So PSD2 is just a general framework for payments regulations, right? The only place it gets to a really technical level, and even then it's not specific, is in the strong customer authentication, the regulatory technical standards for strong customer authentication. Those lay out the way in which a customer must be authenticated, the fact that you need this thing called dynamic linking, that dynamic linking has to incorporate the pay account name and the amount and bits and pieces like that, but it's not specific in any technology or even a technology approach. The reason that the PSD2 is the way it is it's called a maximum harmonization directive. So essentially it's the European Union government, for want of a better word, saying to each territory, you've all got to implement the law this way. And by saying that to each territory, you know, the UK, as it was, and France, Germany, they all have to incorporate that directive into their local laws and then act on it. So at a local level in each country, their national competent authority is designated as being the almost the custodian of those laws once they're enacted into local law. And the national competent authority then is in charge for financial services, is then in charge of actually manifesting manifesting those laws in terms of technical standards and an implementation, right? So there's this kind of trickle effect from the European Union down into somebody acting on behalf of the national competent authority. So to give you an example, in the UK, the national competent authority is called the Financial Conduct Authority, and the people that acted on behalf of them was the OBIE, Open Banking Limited, a private company that acted on behalf of them to, one, work with the banks to create the standards, and then two, make sure those standards were implemented. So because of this, there's almost no overarching umbrella in terms of the technology, but it's fair to say that there's very few routes you can land on from that kind of directive into how it's implemented in local law. And the other interesting thing is that you should just be, just for general awareness, is whilst APIs were made mandatory for in many territories, and in the UK they were made mandatory for the 9 largest banks, for example, screen scraping still continues and can be offered by banks who aren't one of the largest 9. So it doesn't have to be APIs, you know. Some of that screen scraping thing is called the modified customer interface. I think I saw MCI on Daniel's slides somewhere.
Kind of author a post kind of like supporting screen scraping or offering at least an argument why it's still being implemented.
Because it's the quickest way to meet the regulations, right? Yeah. Right. The fact of the matter is that some banks don't see the opportunity of open banking, and that's for them to decide, right? Open banking for some is a compliance exercise under the auspices of PSD2 or whatever regulation it happens to be. Others see it as an opportunity to change the way that their bank operates and the services they offer. So it depends on which side of the fence you fall on. If you fall on the compliance side, you know that screen scraping is happening. You're seeing, you know, Yodlee or whomever going and web scraping your internet banking interface. So just stick a certificate in the way, and you've got the modified customer interface, which is what that really means, and off you go. So yeah, it's what's the opportunity, right? And I mean, the naysayers around open banking will almost certainly say it's just a compliance exercise. That'll be one of their arguments. Whereas the proponents of it will say, well, it's much more than that. It offers banks a means to do business in a different kind of way, where, you know, it's not just about this idea of disintermediation. It can be viewed in a positive light. So you can sell wholesale banking, if you like, as opposed to needing to be directly in contact with the customer. So yeah. But to finish the point, it's kind of, you know, technical standards vary. I think you're channeled down a given route, given that most APIs in the market that aren't banking do things in a particular way. So it's building on top of those that modus operandi, right? Building on top of that is the means to deliver standards,
right?
Rather than,
it would seem like open banking is more than a compliance exercise, and especially when you consider how, you know, standards like OpenID and Oauth are like offering some benefits for handling user data more efficiently throughout a platform. Maybe let's open this up for Daniel too. Like, do you believe open banking is more than a compliance exercise in general and in the security response as well?
For sure. At least the opportunity is a lot better than just for compliance. I've worked with both kinds where they just want to comply with something and they don't market their APIs, they don't do anything, but they're there. And even then, they had fintechs doing some interesting implementations using their APIs. So there's clever companies out there that can do really cool stuff with your data. Yeah. So if your banks, if you realize that and just market your APIs and put time into them, I'm sure that you can earn something from that as well, not just marking the checkbox as done.
Yeah, completely agree. From what we've found with Nordic APIs and at our events too, our last open banking livecast, for example, featured Gunnar Berger from Nordea and explaining their whole open banking journey and just the amount of huge interest from fintechs or TTPs, as we're now calling them now. So it seems like there is like a business imperative too. But also, I think something that we haven't mentioned yet is just the trend toward digital banking and how COVID has amplified our reliance on digital banking. And has that increased the open banking trend, made it more prominent, and thus, amplified security in response to that? Either of you can answer.
Go on, you go, Daniel.
Thanks. Well, see, it's hard to say if there's a trend or not, but I do still get a lot of consultancy questions around how do we secure our platform, even if it's open banking or if it's something else. I would say it didn't decrease during COVID, and we know that people are shopping more from home right now. So the need for open platform where you can do your shoppings in a secure way, and perhaps where banks and others can start to earn money from the folks shopping from home in new ways. I would be surprised if we didn't see a curve up here during COVID.
Right.
Yeah. Chris?
Yeah, similar thoughts from you, Chris, I assume.
Yeah, so COVID, there's a report from McKinsey where they surveyed their customers, and they reckon that the acceleration of digital products and services has been advanced by about 7 years or something like that. If that's true, then obviously there's organizations are going to take security more seriously, and that should include banks because they're offering more digital products. There's more APIs in the market, so it stands to reason that they'll take security more seriously. I would argue that it's a position which is being solidified rather than being matured. API security approaches at the moment, if more companies are offering digital products, they'll be using the kind of standard approaches that are there at the moment. But the evolution will come now that the markets reach the level of maturity, and things like using open standards for biometrics. I've already mentioned FIDO2 and the role of WebAuthn. There's a new variant of WebAuthn coming called Secure Payment Confirmation, which is specifically for use in an e-commerce context. That could be groundbreaking in terms of providing security from the browser right to the back end in a really comprehensive way.
Right.
So I think there's in essence, we're getting to a level playing field across providers who are doing digital things differently. But for the future, there's going to be increased sophistication and increased opportunity to be more secure.
And it seemed like an increased amount of sophisticated threats and vulnerabilities out there as well, which I was hoping we could address. Like, what do you see the most common threats are with open banking?
Well, I think the stealing and misuse of data, right? So at the moment it's based on a consent model. Well, this is in Europe, largely speaking. It's based on a consent model where the legal contract is between the TPP and the user. The bank is just a facilitator, and from a regulatory perspective, that's the role they have to play, right? However, the safeguards that are on the banks need to be applied in equal measure to the TPPs, and I think possibly the misuse of data is the biggest threat. If there's a rogue TPP who's selling your data on or making payments they aren't authorized to make, I think that's the main thing. So there's this concept which is being discussed in the UK called smart data. So a TPP gets the data for just enough time for whatever job it is they need to do on your behalf, and then it's gone almost. Right? So a kind of a different approach to the, well, we'll access APIs and take a scoop of your data and then we hold it indefinitely. So increased threat needs better mechanisms like, you know, what smart data promises. It's only a concept in order to help make sure that consumers' data is safeguarded sufficiently. Right. And that's just one threat, but I think that's quite important because at the moment there's very much a consumption mindset in terms of how the data is pulled out of the banks and then delivered to the TPPs. Actually, there needs to be a more, I guess, holistic model which covers security end to end and make sure they really do only get what they need in order to do the job of the customer, and make it a much more proactive process between cutting off access and then data being removed and having the kind of proofs of removal. So yeah, I mean, I'm sure there's tools out there that can help do this, but in terms of standards and in terms of a market approach to that, it's really only at a conceptual level at the moment. So
yeah, I'll pose the same question to Daniel, and maybe we'll just end there. You know, some of the most common vulnerabilities you see for open banking, and any, you know, essential takeaways for our viewers today.
Yeah, well, getting banks to open up is very good, of course, but that also poses a big threat, because since not everyone does that because they want to give away the data and share the data and use it as the compliance checkbox, they might not follow the security guidelines enough, and that I would consider that a big threat. Just right. We're forcing them to do something they might not want and that they might not take it seriously enough. Of course, there's regulations and there are fines if we're doing that, but those are after the fact. I'm not sure we've seen any big breaches yet, but they might still come, or it might be that we just don't know about them yet. Yeah. And rogue TPPs are, of course, always a threat that's harder to protect against, but the things that Chris is talking about sounds promising. That comes to light sometime soon. Awesome. But yeah, I think that's my takeaway right now.
Perfect. Well, I think we're out of time there. Thank you to Chris and Daniel for sharing your time and all your insights on securing open banking. Really appreciate it. And I'm just going to sign off with a couple of slides from some Nordic APIs updates. So if you love APIs and have a story to share, our blog is open for community submissions. You can read our contribution guidelines and pitch a topic at nordicapis.com/createwithus. We also operate a newsletter featuring bi-weekly updates from our writing team. You can sign up on our website to always have a little dash of API knowledge in your inbox. And until it's safe to hold our typical in-person conferences, I'll just be arranging these monthly webinars. So I highly recommend you also tune in for our next event, API as a Product, which will cover monetization tips for API product companies. And finally, as usual, thank you to our sponsor, Curity. You can learn about their Oauth server and identity-driven API security solutions at curity.io. So that's it for this one. Thank you so much to our speakers. Thank you to everyone who tuned in live. to help generate discussion, and hope to see you at our next event. All right, bye now.